Hi everyone, I'm Paul and welcome to my market review for Monday the 25th of July. Haven't done one of these before, so I'm just going to test it out and see if people like it. If you do, let me know in the comments. Make sure you like and subscribe, and let's jump into today's video where we're just going to run through an analysis of the various markets and where we're at, particularly focusing on crypto as always. So where I thought we'd start is with the dollar. So the dollar index is always, or the DXY is a really good place to get a sense of if it's risk on or risk off. The thing to take note of is just how strong the move in the dollar has been since mid last year. So you can see this is a monthly chart, and you can see there's been very few down close candles on a monthly basis, and even where there has been, they've really acted as support. The market's not closed below those as it's made its march higher. So you can see we took out these relative equal highs here, consolidated a little bit before punching higher. Now, how much further the dollar will go, it's a bit hard to say. You can see that we haven't quite taken out this high over here yet, but I wouldn't be surprised if we see price start to work its way up into this imbalance here before we see some more consolidation. Now, if we go down to the daily chart, what we can see on the daily chart is we've got a bullish fair value gap starting to form just here. You can see the market's traded down into that. And I wouldn't be surprised if we see some support here and then the market, start to rally higher. See, you can see we've done that pretty much the whole way. All these pullbacks have been bought, and this trend is just extremely strong. So I think for anyone who's looking at taking on positions at the moment, just worth being very conscious of what's happening with the dollar. Even though it has been a little bit weaker, it's pulled back from its highs up here at 109. I think that's only a temporary reprieve, and I think we're going to see the dollar going higher. We saw the euro go to below parity, which doesn't happen very often. So that just gives you an idea of how strong the dollar is and really how risk off the environment is at the moment. So I think if the market can take out these highs here at 109, I think that we're pretty high probability that we're going to trade right up into this zone up here. We'll go through these highs here, and I think we'll move up into there. That's going to take a little bit of time to work its way through, but that's sort of my longer term hypothesis about what I think is going to happen. Now, if we move into some of our legacy markets at the moment, so if we look at the S&P, the thing that I've been thinking about a little bit at the moment is just the move that we had from the COVID low to the high. And so what I think we're going to see is an erosion of nearly all the stimulus that was pumped in during COVID. So if you look at this, is where the low was from COVID right up to the high. Obviously the market's been pulling back. And if you think about where the market was trending towards, it would have been ended up about here. But I think all that artificial stimulus has really forced the market into this overstretched position, and so I'm really anticipating that the market is going to come back to this level. And if you think about it, even just logically, that we've had this major pandemic, it's had a major impact on economies all around the world. It just seems very unlikely that the market would be accelerating away under that environment. You would expect the market to be weaker, even though equities markets are obviously always forward looking. It's really difficult to forecast what those long-term effects of COVID are going to be on the global economy, but you would have to bet that on balance it's going to be a negative. So it doesn't make sense then that we've extended this far, and it just seems common sense to me that we will retrace and go back to a more normalized sort of pre-COVID level, if you like. And so if we look at the S&P, you can see from the low, to the high, we're still sitting in this premium market here. And if we go down to our, daily chart, you can see the trend is obviously bearish. Obviously the market has been stronger recently, but the overall trend is still down. And if we can see here, we had this sell side liquidity taken out here as we traveled downwards. And then we had these lows taken out down here as well. So we've had all of this sell side liquidity taken out. And you can see in this really big move here, we had the market gap. Now, in this consolidation phase we had after we dove into this sell side liquidity, we've filled in that gap, and we've gone into a ranging environment here. So if we just have a look at the range, and you can obviously draw this in all sorts of ways, but even just really roughly, you can see this range that we've formed here. We pretty much traded to the top of the range, came back to the middle, and we've just oscillated between the top of the range and the bottom. and now we've gone above that range, and now we're retesting the top of that range. And so this is a pattern that you'll see across all of the markets I'm going to talk about in today's video, and they're all just in slightly different places. So you can see the S&P has come above that channel, and we're now consolidating above it. So really the test here is, can it find support, and will it continue higher? If it breaks, obviously, the high of the channel here and comes through, there's a fairly high probability that we're going to trade back to the midpoint and potentially all the way back to the bottom of the range. And if you look at previously, as the market's traded down, when we've historically done that, you can expect that we'll probably go through that, and that would, lend more weight back to my hypothesis about the market coming back and trading back below this sort of 50% mark to erase a lot of these gains that were made from the COVID stimulus. So if we look at the NASDAQ now, you can see that it's a fairly similar pattern, and if we run our fib from the high to the COVID low, you can see we're in a similar sort of position. Now it's slightly different. On the NASDAQ, you can see we've already traded down towards that 50% mark, where you'll recall the S&P was sitting higher. So the NASDAQ has fallen harder, and it's actually taken back some of those losses much quicker. And you'll see that now as we come in and look at the daily chart. So you can see the same pattern, very similar to what we had on the S&P. So the market has fallen here, traded back up, filled in this gap, and you can see in terms of the channel here in this range, you can see that the NASDAQ has traded through that range and has found a little bit of support here, where the S&P was actually still trading sort of in this zone, because you remember the same sort of candle pattern had formed on the S&P as well. It was trading there. You can see the NASDAQ has actually traded back up into this imbalance and is consolidating here. Now, if we go over to the side here, you'll see the reason why we consolidated at this point is we've had this daily fair value gap sitting out here for quite some time, and you can see that's where the market sort of found support as it's traded down into that zone. It's traded through it. We've taken out that imbalance. We obviously took out the sell side liquidity here and here, so we've taken out the sell side liquidity here on the way down. Classic sort of bullish fair value gap setup, where we've taken out the sell side liquidity, traded into that imbalance, and then traded higher. And the liquidity has been taken out now in these imbalances here and here. And obviously, as we took out these relative equal highs here, the market has then traded up into this zone here. But we have this interesting situation where we have the NASDAQ leading and the S&P lagging. You'll see as we look at Bitcoin and Ethereum, we have almost the same thing happening, where we have Bitcoin lagging and we have Ethereum leading. So if we look at Bitcoin on our weekly chart, you can see we've had finally a grouping of green candles, which we haven't had for a while. And the market's found a little bit of support at this level. Now, the reason why we found support here is we've got this all-time high back here, and we've also got this weekly bullish fair value gap, which has formed just here as well. So it's not really a surprise that the market has found support at this level. I actually posted this as a setup in my community tab. I didn't take the trade myself. I'm still expecting the market to trade lower. If you took that trade, it was a good one. If you'd gotten set anywhere at the bottom of the range here, you would have picked up probably a nice 10% or so return on the bounce from that level. So if you took that trade, that's fantastic. As I said, I didn't take that setup, even though I posted it myself. So you can see we've got this similar pattern that we had on the S&P and on the NASDAQ on Bitcoin as well. So you can see the market's traded lower, and then we've come into this range. So you can see the difference on Bitcoin between the NASDAQ and the S&P is we've already failed to break out of the range. So we've traded up into the top here. Now, you could say that the top of the range is lower or higher. I don't think it really matters. You can see that we've got a failed breakout here. So the market sort of has drawn into this liquidity. There's actually obviously an imbalance here, a bearish one. So the market's traded up into that level. It's failed to hold above the top of this range here, and we've now started to trade back into it. And generally, when one of these breakouts fails, we'll see a reversion back to the middle of the range. So you expect it to go at least to this midpoint here, potentially to the bottom of the range. And so often that's happened before. You can see it sort of here and other places where Bitcoin's consolidated. If we lose this range and we break through and go lower again, which is sort of what I expect, is that's when I think we'll start to come down and trade lower. And so a loss of that range I'm expecting will take us down to, these levels down here. And this is where I would be looking at getting my spot position set, and I would be buying quite aggressively down at this level. So if we lost that level, I'd predict that we're potentially going to come down into this sort of $12,000 to $14,000 zone. You can see there's this monthly bullish fair value gap here on the monthly chart, and we've also got the support of this previous high here. So I think if we come down into this zone, as I said, I'll be buying quite aggressively. I think that's going to be a really great opportunity, but it's going to feel pretty awful, obviously, after losing that range. So if we move on to Ethereum now, you can see very similar setup to Bitcoin and the other markets. Is we had this pullback here, and then we formed this range. And so pretty much the same as before. We took out the sell side liquidity on the way down before finding a little bit of support, and you can see this range has formed, and then the market has then traded to the top of the range back to the midpoint before breaking out. Now the big difference between Bitcoin and Ethereum is that Ethereum has broken out of that range and is now trading higher, and you can see it consolidating at this level, so inside this imbalance here. So again, similar to the situation we had on the NASDAQ and the S&Ps, we have Ethereum leading Bitcoin, and that's generally not what you really want to be seeing. You want to see a Bitcoin-led rally, and so that's one of the things that makes me a little bit suspect about this move, is we have the move not being led by Bitcoin. We have Bitcoin already failing to break out of the range, and we have now Ethereum consolidating above the range. Now, that's not to mean that this is not a possibility and this could just be what's going to happen. It just seems to be a lower probability outcome to me. And I would think then that if you see Bitcoin go back into the range and trade back into the midpoint or lower, that you'll see a really savage pullback on Ethereum. And so all of that's great. The question would be is if we think the market is going to go lower, how could we take advantage of that? So if we have a look at Bitcoin we'll go back to the daily chart to start. So you can see with this move, we've taken out the buy side liquidity in the move. So the previous liquidity would have been resting, here and here, and we've taken that out as we've traded back up into this imbalance here. So if we now zoom into our 4-hour chart, 4-hour chart's one of the ones I like to swing trade on, you can see that we've got a bearish fair value gap that's set up just here. So you can see this is where we've taken out all that buy side liquidity here. The market's then traded lower. Then we've got this bearish fair value gap set up here. So that's our 3-candle formation, 1, 2, 3. And we've had this break in market structure just here. So you can see the market's already traded up into that range twice. Once in this push and then again in this push. And then actually here, we've now got another bearish fair value gap that's setting up here. So we have a fairly classic, lower high, lower lows happening here, and so you could look to trade into one of these bearish fair value gaps or wait to see if you could trade back into this one. This is obviously going to be a higher probability trade here, and as before you would have your stop sitting up here. And so if you're looking to get set on one of these particular setups, if you're going to look to take this one, your entry would be here. You can even use the order block as a limit order entry here. You can see that would have worked on this candle here. So assuming we've done that just to get a slightly tighter entry. And then if we're aiming at a reclaim of that midpoint, you can see that that's a fairly easy 3-hour trade. Now obviously the market's already traded into that a little bit. Now if we were looking at getting set on this particular position, again we could use an order block entry here. So we could use a limit order here with our stop there. And again, if we were still trying to aim for that midpoint, it's just under a 3-hour return. So again, a pretty good return, and you could obviously try to manage your stops to try and aim for, the other side of the range if you wanted to get more aggressive, and that's going to push that return out to, 6 or 7 hour, maybe more if you could get set up here. And obviously, if you wanted to get a bit of a tighter entry there, you can then drop into a lower time frame and look for that bearish fair value gap set up. And so one of the things I like to do is to have fair value gaps within fair value gaps, because that gives me confluence in a particular region. Now you can see there's one here, and that resides inside that one that we're looking at on the 4-hour chart. So again, you have a lot of confluence there, and it gives you a lot more confidence in taking a short position in that region. And you've obviously got another one sitting just here as well. So if we were going to take this setup, so you can see we've got quite a lot of confluence in this zone here. We've got our 3-candle formation. This moves broken market structure, our fair value gap here, so we could put our limit at the high of that 3rd candle if we wanted to, and that would stretch our limit out over here, and we would just be looking for the market to trade up into that zone to get set, and we'd have our stop sitting up here. So if we tried to place this kind of trade here, and again, because we're on a lower time frame, it's going to be a much tighter entry. We won't need to see as big a move. And so if we're aiming for, for a 3-hour return, you could target these lows here, and you're going to easily pick up your 3-hour return there. And if you're trading to the midpoint, you start to get out to a 6-hour return. So that would obviously be a great trade. Now, if we look at Ethereum, given that we think it's more extended, and given that we think Bitcoin will trade back into that range down to the midpoint, possibly to the bottom of the range, it makes sense to potentially take that trade in Ethereum because we're going to get a larger move than we will on Bitcoin. So if we look here, we've already got a fair value gap starting to set. Now this is not finished forming yet, but you can see it's already starting to. It's got another hour or so to go, but you can see we've got a bearish fair value gap starting to form there, and you can see that there's other ones that are formed here. So you've got one just here and another one in there. This setup's going to be the most favorable. We've obviously got the high here, and we've taken out these relative equal highs here, traded right up to the top of this imbalance, and you can see where the market had previously consolidated here. That's where the market stopped and immediately reversed back. So that's a good point for our setup. We've taken out that liquidity. We've got our setup now. If we went and zoomed in a little bit closer, again, you can see we've got these fair value gaps which are set up, and they're inside the bearish fair value gap we have set up on the 4-hour. So you can see we have one there if we're using this candle. Now my personal preference is, even though I may use these lower time frames for a tighter entry, I would still want to use this high as my stop. So it's not going to give obviously as tighter risk return as you would normally, but you really want to take advantage of that long wick because that's where that liquidity is all being taken out. And assuming our hypothesis about what's going to happen in the market is correct, it's going to be pretty unlikely that that high will be taken out, but we want that wiggle room. So you can see, even if we reclaim or just trade back to the top of the range, we've got almost a 3-hour return there. And if we go back to the midpoint, you can see we can start to get to 4.5, 4.6-hour return. And if you're just going to trade then just the 4-hour chart, if you took this particular setup here, again, a pretty safe trade would just be to the top of the range. That's about a 1.8-hour return. Into the midpoint, it's going to be a bit over 3. So there you go. I hope you enjoyed my first market review. I think just make sure you keep an eye on the Dixie, on the dollar index. If we see more strength there, then I think that that doesn't spell good news for equities. We already can see that most of the markets are in sort of slightly weird positions, with the NASDAQ leading the S&P, with Ethereum leading Bitcoin, and Bitcoin already losing that range break. So that all just suggests to me, given that the macro outlook is still pretty bad and there's quite a lot of uncertainty, is that there's still going to be lower prices. And I'm really expecting to see, a lot of that froth that we had with all that stimulus from COVID just all removed, and we've still got a little bit of work to do before that's all gone. And I think once we get to that level, we'll start to see the market start to recover. Thanks for watching, and I'll see you on the next video.